Good morning, everyone. Welcome to the London session on TopstepTV. Let me just make this full screen. Why did that change? Okay, never mind. I'm going to have to redo that. All right, so Monday morning, new week. Let's have a look at what's going on. I literally woke up like an hour and a half ago, but I've been messing around with like my camera settings and stuff. So hopefully that's gonna hold. If not, we may have a case of camera falling down. So so do bear with me if that does happen. But yeah, I'm trying to kind of mount everything onto the same area, so not sure how that's going to work. Anyways, let's get into crude oil. That is the first thing that we're going to be doing. So weekly chart of crude oil. I don't need two charts. If you're here for the first time, my name is Deeyana Angelo. I've been trading for 17 years. And 12 years out of that, I've been trading futures. Wow, okay, so we're opening with a gap. I haven't even looked at the markets yet, right? So we're going to do this from the beginning. Okay. And again, I'm still a little bit croaky from like a couple of days ago, so still getting over the cold. It is what it is. What do I need? I need to grab some levels. Again, this is something I do every single day. Get some options data, see what's going on. Okay. And then we need that on this chart. All right, so since it's Monday, and I don't really like to do too much trading during the early parts of Monday, especially not when the day starts like it started today, with the cameras and stuff being a little bit tricky. Yeah, if you have any questions, just pop them in the chat. We're going to make this probably more into a class than active trading session. And as always, don't rush into things on Mondays, because it's counterproductive, because all you do is dig a hole for yourself. So we need to, breathe, just try and get all the Brett Steenbarger likes to say, find understanding first, don't look for trades, look for understanding. So that's what we want to be doing. And what else do I need? I need options data for gold as well. And with this camera thing, I may have to go back to the Elgato cam, because although this one has great, I mean, it looks great, but it might be a bit tricky to mount on the setup that I've got right now. What do you guys think about, does anybody have face cam from Elgato? I had it, I wasn't that impressed with it. But it is easy to use, and yeah, it's always tricky with the setups. Like, we want to give you quality and everything, but then there's a case of bigger cameras weigh in quite a bit, and when you want to take them away from the floor stands, because I don't want to have anything on the floor, that is fraught with difficulty. All right, and I want copper options levels as well. And then we're going to get into the volume profile. Platinum I'm going to leave for a little bit later. But I know quite a few of you trade copper as well, so we want to see where those levels are. All right, so copper, just ballpark looking at things, copper looks the best for the levels in play at the moment, because we have a level of interest at 445. So if I go to copper, so 445 is a level of interest, and that's exactly where we are. So maybe that's something to consider. Okay. Large time frame as always. So weekly chart, we have a balance area and a point of control from this visible range at 423.50 ballpark, and it's possible that at some point that might get tested. That is where the demand area lies as well. So if you have a look like this, that is where the demand area is. So this is like a massive time frame, right? And overall, we have some passive buying happening here at 429.55. So that's where they stepped in. So right now, for the purposes of this week, we have a range established. This is a low, and this is a high. So again, very big range, but that's just like bird's eye view, just to see what's happening. And then we have some lower volume areas here, and then we hit another supply area up at 458.45. So if we find some longs, that could be a pretty decent area to look for further shorts, because that's where we've been coming from. So not much has changed there. Now on the day time frame, I see that overnight we've had a bit of movement to the upside. That could mean that London fakes that out and goes the other way. And we're opening with some gap to the upside when I'm looking at value areas. But the gap is pretty sizable. Whenever that happens, I don't necessarily expect a full rotation down to the value area. But it's kind of on the cusp. It's got a 0.73% distance from value high. Just for reference, value high is at 439.61. So that is quite a ways away. So yeah, I'm going to have to wait and see what happens here. We have some momentum building on a 30-minute chart, so let's have a look at that. Need to find a better way to do this. So yeah, we're building momentum from the bottom side. Whenever you have that, there's a pretty good chance that there's enough power in that to keep going, so I don't necessarily want to fight that. We are a little bit away from the overnight VWAP, which is one of the things that I look for the London session. But having said that, it's not like we're miles out. So even if we have like a fade of the move, the only fade that I would do is down to that VWAP, and then I would want to see what happens there. So it's not terribly sort of lively and whatever. So it's, again, it's Monday. We need to just be a bit more relaxed about things. Let's find crude oil. So just trying to find that chart. Here it is. And again, weekly chart, crude oil. Huge bearish engulfing last week, straight into those demands that I mentioned from the previous contract, the previous week on my own channel. And now we're kind of sat right around 68.50. Now, I could see that we had space down to 68.50, and that was kind of my ballpark area where I would have expected to see some buyers, but that happened overnight. So now we need alternative strategies, because if you are always just relying on one thing, that is not good for flexible bias, because you want to have especially on crude oil, right? Crude oil is such a double-sided instrument that it needs to you need to have both sides of the story, because it goes up, then it goes down, and then it goes up again, and this happens all within the same day, same 24 hours. And whenever you're coming in with like, oh, I've got a momentum trade in mind, that's never really going to work. This is why I don't really add onto crude oil trades once they went away from the entry, because crude oil is just not that type of a product. It will come back to bite you. It will punish you because before you can say reset, it's going to come back on you and hit your stop. So very difficult thing to trade for sure, but at the same time I absolutely love it, right? So I have been trading crude oil for 12 years now, day in, day out. I know it really well, and I did a little Q&A on my Instagram over the weekend, and they're always asking me, oh, how can you trade crude oil? Crude oil is so difficult. I can't work out crude oil. Well, just remember that crude oil is quite technical, right? So crude oil follows certain time-based events almost to a T. Like you can kind of set your watch by it, All right, let's see what sort of plugs we've got. So we have Aaron Ellis on TV. So Traders Canada actor Aaron Ellis is joining TopstepTV on Thursday, October the 24th at 11 a.m. Central. So make sure you have an alarm set for that. And then I just have a couple of links for you. So if you didn't know, TopstepTV actually has an Instagram and a Twitter page, or X page, whatever they call it right now. So I'm just gonna plop those in so we can get those out of the way and then get into some more analysis. But yeah, I just don't want to forget about this. Whoever says, like Lido says, oh, I swear CL is so unpredictable. So think about it this way. If you look at time of day as a level, as a concept, here is what happens nearly every single day. You have a bit of a messy London session. Asia sometimes moves, most of the times it doesn't. Right now it's glued at VWAP, so immediately that's not really getting me all kind of giddy to actually do anything with it until we've actually moved away from overnight VWAP and then maybe fade back towards it or something. So that's step one. We need to be away from VWAP at the open of the next session. And it doesn't matter what session it is. Now it's London, we can have New York, and we can have Asia, right? If VWAP is just there and everything's flat, especially the flat curve, that means there's nothing to be had there, right? It's literally just whatever, But on the other side, you then have something called the Forex option expiries. Crude oil is a Forex-linked instrument because it links heavily with the Canadian dollar. Why? Because Canada is the largest exporter of crude oil. So naturally, if you're going to have a very large option expiry at 10 a.m. Eastern, which is 9 a.m. Central, there will be a reversal. And how big that reversal is dependent on the size of the option and possibly even some contextual stuff that we have happening around there. But almost 77% of the time, in the period after 9 a.m. Central all the way to about 10:30 a.m. Central, when we have the Euro close, you will have a reversal of some sort. 77% of the time, okay? And I'm not talking 3 months. I'm talking 12 years of data here, right? So if you learn to anticipate that and not chase momentum trades and to hold them until the cows come home, you can actually figure out a way to get in on that reversal. Now, how long the reversal will last or how far it's gonna go, those are the unknowns. We never know that. But one thing is for sure, that there will be a reversal at that time of day for crude oil. Then we have a bit of a lull for lunchtime, New York time, and not much happens. In fact, if you get a reversal during that time, usually there's going to be a fake out, because as soon as people come back to the desk after lunch, what happens? They either take off more positions or they put more on. And that causes yet another reversal into the settlement time, which for crude oil is 1:30 p.m. Central, that's 2:30 p.m. Eastern. So again, if you anticipate that before it settles in that last half hour, it's going to reverse the day's move. You've got something, you've got the framework from which to work from. And it's not the framework from your own head, or would like this to happen. No, we have used the observable behavior of the instrument itself, and we're trying to use that in our strategies. It's a very different thing, right? Yes, exactly. So write it down. It is something that I teach in my methodology quite a lot. Now, depending on what you're trading, like for example, copper probably won't do that, right? Platinum also probably won't do that. In fact, platinum quite likes to reverse for 11 a.m. Central, New York lunchtime. And then it runs for about 30 to 35 ticks. So let's say that I'm in on a momentum trade from platinum, which does happen quite a lot. Platinum trends quite a bit more. And you get to New York lunchtime. I'm going to cut it there. Why? Because the probability of platinum reversing at that point is pretty high. So that is my concept that I like to refer to as time of day as a level. Time of day is a level, right? If something happens outside of that time, especially on crude oil, I will discard that. Like, let's say we accept value during the initial balance. So we've got the first hour of trading, everything's kicking off. But you see a value acceptance on crude oil. Am I going to jump on that? 9 out of 10 times, no. Why? Because crude oil value acceptance during initial balance has an accuracy of about 25%. Do I want to be trading something that only happens 25% of the time with quite some success? No. So that's how you use probabilities data to increase your anticipated events. So we have to learn to anticipate based on the observable things that product has done before. All right, so Chad says, I don't get why you would lock me out $13 under what, is that, did you pass a combine or something? Oh, I see. Yeah, okay, so did you, so you didn't hit the target. Okay, have a look in your, Chad, have a look in your settings. So do you have this set to liquidate and block or just liquidate? That is a huge difference. And if it's just liquidate, then we can do something about it. But if you've done liquidate and block, I'm sorry to break it to you, but you're gonna have to wait. You're gonna have to wait tomorrow. However, look at it this way: it's just another day, right? How many? Like when you're trading in an actual funded account, there is no goal. There is no goal. So every time I see people chasing, oh, if I just hit this, just look at it as another day. In the grand scheme of things, it is not going to matter one bit that you reach target tomorrow versus today, right? It's not going to matter at all. In fact, Mark Minervini, he said somebody asked him to do this experiment. He said, take $100, go outside and throw it in the air. Bit extravagant. But at the same time, will you actually think about those $100 3 years from now? No. Chances are you won't even notice that they're gone, right? And same thing. You say you've got $13 to target. Why does it matter whether you pass it today or tomorrow? It's still the same. You're close. In fact, look at it from the point of view that it will give you time to adjust to any sort of euphoria that you might be feeling if this is your first time passing a combine. If it's not your first time passing a combine, then, I get it. it's like, to me at this point, it's like, yeah, pass another combine, whatever, man. But at the same time, I did get annoyed a couple of times because I wanted to pass a combine myself on air, right? And then just before we went on, I was trading Asia, and I think Nikkei went to like the day's target, and then I couldn't do it because I set it to liquidate and block. So then likewise I had to wait for another day, and of course the next day the setups did not quite come in the morning, so I actually had to wait for an entire day. Oh my god, shock horror, right? you have to wait for a whole day. But yeah. If you are $2 off the consistency rule, are you over or under? That's the question. Over or under? And yes, trade Yoda. Good morning. He says, do you trade gold futures? Yes, I trade gold futures. Not sure how well they look today. Yeah, so are you over or under? Yeah, great. I just love when it just keeps going to all-time highs overnight. That is brilliant market, yeah? For sure, we're going to end up in a chop. Okay, so again, we're opening not too far away from VWAP. And that doesn't give me much of a profit margin until we move even further away from it. So to me, this is still very slow. There's no good setup there yet, sadly. Okay, let me find gold. There it is. And by the way, I'm almost over this cold, but it's still there. It's like so annoying. It is causing my voice to be croaky, but I generally feel almost back to normal. I was a bit tired yesterday, although that doesn't have to be the cold. So yeah, right now gold opening with a gap up. Slightly far away. I don't like this passive buying that I'm seeing on a 15-minute chart, so I'll tell you what that means. So here we go. When something is about to fail the auction, so we have the initial balance that was established like this. We poked outside of it, didn't exactly go anywhere. We're opening above value. So that's technically bullish, but again, if it's too far out, that is then fraught with difficulty. And yeah, so to me, this now doesn't look right as a price action activity for any sort of shorts. Why? Because I'm seeing buying wicks. Now, buying wicks a lot of the time in a 3-bar reversal, it usually means passive buying, and they're just going to continue to do that. Causing a fake failed auction, a failed auction. Yeah. So yeah, my guess is this is just going to keep going, but doing breakout trades for Monday morning on a London session when this is an out of hours market, probably not what I want to be doing. So I'm going to stay patient today and let everything develop nicely. Mondays can be tricky to trade, especially because in some instruments they tend to go the opposite way to the rest of the week, just statistically speaking. And this is another reason why I'm not really itching to get into anything right now. So yeah. But yeah, passive buying, lots of buying wicks and stuff, that is not good for me. If the time of day was a little bit different, if we were in the overlap or something, we then have that power of extra volume coming in, and we can then run a breakout momentum trade. But right now, this would be a pure guess. I don't like guessing. I like to use statistics to guess, right? And, lower volume and just kind of trickling upside, trying to fill the auction, but not really, and then passive buying, and then buying wicks, and it's like, that's not a momentum trade. To me, that is just them not having enough power to do anything that they want to do, and then failing on both sides. So that is a crappy market for me. Okay, hello Deeyana. What temporality? Temporality? What period you mean? Do you use the VWAP? So there's some autocorrect typos going on. I'm guessing what this person is trying to say is, what period do I use the VWAP? This VWAP is the overnight VWAP, so it is anchored to the start of Globex. So that is the overnight session. At my time, London, it's like 11 p.m. the previous night, and that's what it's anchored to. Sometimes I will use session VWAP for certain range-bound days as a target, but not really as a starting point. However, if we're talking equities and I'm trading power hour or something, then I will absolutely use the test of overnight VWAP as an area of interest, because equities love VWAP. They absolutely love bounces, long bounces of VWAP. That's like a very strong thing. No matter the situation, we can be in a range-bound day, we can be in a trending move, whatever. If you see a pullback to VWAP, you know I'm going to jump on that. So, yeah, unless we have a semi-apocalypse happening, and then we have like a lot of shorts panicking, panic selling, then I may stay out. But generally, semi-apocalypse doesn't come that often. We had the credit crunch, then we had COVID, European austerity measures. So, every few years, there is a potential for a semi-apocalypse. And at that point, probably don't long equities until you see a nice reversal, and then they just shoot back up to exactly where they came from, with varying strengths. Stop Hunter says, can you please explain what you mean by ADR levels? Well, average daily range. It can be used in several ways. Or average true range is the same concept with a slightly different calculation. So ADR is an average of how much movement we've had over n number of days. So let's say if I take the previous 10 days on GC, we had an average of about 140 ticks movement for the London session. Quite a bit more for the COMEX session at 230, but this is London, so let's stick to London. So 140. And if I were to plot that with dynamically plotted new session highs and lows, or new session highs and lows, where would we end up? Where would that number get exhausted? Now, those are algorithmic ranges, right? And I do use them in my method quite a lot. And I have a concept that uses only regular trading hours, RTH, and I call those the average session ranges. So anytime you hear somebody talk about average session ranges, at this point now that the Mark Stoker's method has been out for about 5 years, and I've had I think it's over 10,000 students that have taken it now, especially the shorter courses. There have been people who have adopted the concept of ASR and ADR as a level. So whenever you see average session range levels, that came from me, by the way. So just wanted to clarify that. It didn't exist before. I came up with it in 2013. And even though some people might have said, oh yeah, but it's logical. It was logical, but nobody was doing it, okay? So I needed something as an intraday trader once the ADR was smashed through to tell me what other level at the start of the next session I might use to fall back on, right? And it took me probably a few months to go, how do I solve this? Like, how can I find something that is similar to ADR? Where is it going to stop? That is the main question. Where can we possibly stop, statistically speaking? So even if you have a single direction day that's just going to keep shooting in the same direction, just relentlessly, you get to the start of the next session. That has its own set of parameters. So I was thinking, hold on a minute. So if we use the RTH value area, why not use the RTH average range? So that's how I came up with it, right? So, and I kind of, I was thinking, well, how can I call this? This is like average regular trading hours. That's a bit of a mouthful. Average period, just like but it's not really a period because it's like, yes, it's a number of days, but, and then I thought to myself, well, it's a session, isn't it? So average session range, that will do. And I can abbreviate it to ASR. And that's what it is. So how do we calculate that? It is a dynamically calculated measure. And guys, I don't, like when it comes to my methodology, trading is so difficult and I don't hide anything, right? You could probably reverse engineer the way I trade just by looking at the types of things that I've done and trades that I've done. But even when I give everything to everybody, right, they still mess it up. So it's like, it's a huge psychological component to be a good trader, a consistent trader. You know, it doesn't matter that I say, don't do this. People do it. Don't trade more than 3 trades a day. They trade 5 or 10 or 15. I say, don't start trades before initial balance is over. What do? They start trades during the initial balance. It's like, am I talking to a wall? What's happening? But yeah, so when it comes to the average ranges, you always take the dynamic measure. I know that a few things have been kicking around as the fixed ranges. That's not the calculation. That is yet another calculation. So I see on TradingView some people have tried to code my way of coding that I have on Plottek, and they didn't manage to do it correctly because the levels are just not right. What they do get is the fixed daily range and fixed session range. So you basically take the average divided by 2, and then you put half above midnight and half below midnight, and that becomes like a fixed daily range. That's not an average daily range. It's a fixed daily range. It has its use, but yeah, oh yeah, and then the other extreme, when they take the midnight open and plop the entire average range on top of it, above it, and below it. You'll never reach that. Like, what are we doing? You're going to reach that only on the days that are trending hard when it just goes in a single direction. So what is the better way? Dynamically tracked highs and lows of either the day or the session, depending on whether you're looking at average daily range or average session range. So if you're looking at average daily range, as the day develops, whenever it makes a new high, you will move the ADR low a little bit higher. If it makes a new low, you will again move the whole thing a little bit lower until one side gets exhausted. It's a dynamic measure, okay? So hopefully that makes a little bit more sense. That's why when I say my levels, they are pretty accurate, and people are like, how did you get that? Because we track it intraday. It's a calculation that keeps calculating with every tick, every high, every low, until one side is busted, right? And then you have a level. But you can see those to a reasonable amount of accuracy even at the beginning of the day, because, you know, it might move it up and down a little bit, but if you don't have like a super trend day, then those levels are generally going to stay, you know, where they are for most part, for most of the day. So only when we start to trend hard, that's when it becomes very dynamic, let's put it that way. Yeah, interest in gold. Yeah, area of interest in gold. Well, for now it would be VWAP for longs. That's the only thing that I can see here. I wouldn't short it here. I mean, I'm not crazy. Or let's say I'm not that crazy. Because we're all a little bit nutty, whoever's doing this job. But yeah, all-time highs, man. Like, again. How high can it go? Right? Let me see where the options levels are located. Okay, so now where's VWAP? Now let me match up some of these. So yeah, if I'm not looking at options or anything, just ballpark where VWAP is. So 27.43 would be a long. Obviously that might change throughout the day. However, I see that we have a former call resistance that was overshot. They overshot. So now on a back test of that could be a level of interest. It could act as support at 27.35, so at about 10 whole 10 points lower, which is also inside this area of higher volume, and that could be some good area. That could be a good area for potential longs. Where it's going to turn around, obviously, we don't know that. We have point of control as a more zoomed in level. Now, remember, point of control and volume profile, very, very different than TPO profile. I've seen people who are trying to use TPO POC to start their trades, and very, very quickly they learn that just doesn't work. However, volume point of control is an entirely different thing. It tells you where the majority of the participants were at the time, and then we had to move away from that. And this second part, the move away from it, is what matters most. And anytime I'm looking at TPO point of control, that's usually either just from the previous day or it is from today, but things have slowed down and now it's building point of control right where you are. It's like, what point does that serve? So you can only use it as, are we going to run through it? So are we going to carry on through it? Or are we going to again smash to the other side and fall out of bed? But when it comes to volume point of control, I do like to match it up with supply and demand areas, and then look for those as areas of potential reversals. So that's how I like to look at it. And looking at volume profile can very much give you a decent idea of which zone, supply and demand, you should be looking at outside of the regular sort of scoring and stuff. So you can see on the way down, so 27.30, one area, 27.03, and then all the way down to the round number. That's the next area, 2700s. 26.77 is the next one. So, depending on the time frame that you're staring at, you will get different areas. But on my Blautic indicator, I do like to look at the 4 weeks worth of volume profile, and then I match it with the supply and demand areas that are taken just purely from the charts. Now, to the upside, I do see some space all the way up to 27.57, so that 27.60 area. So yeah, we definitely have room to 27.60. Maybe even like if it goes totally crazy, you might see an extension of that. However, at the moment, I have my ADR high at 2760.5. So all of that matches. But we have one interim level. We have a London ASR high at 2754. So they may actually kind of stop a little bit there, maybe a little bit of a pullback, and then up to the 2760. But I'm not looking at anything reversing. So it's like, whatever, right? Ron says, "Hey girl, sounding better." Yeah, I am feeling better. I'm still sick. Like, this horrible cold has just been real man flu. Can a woman have man flu? I don't know. But yeah, it's a little bit annoying, but it's that time of the year when everybody's sick. And my husband went to the gym and presumably brought back a cold, like from a steam room or something. And then he got sick, and then literally a few days later I got sick. And I was like, thanks, man. Is there an email address to contact support, not to go through Windy? I have no idea, but I saw something on Twitter that they now have phone support. Not sure whether there's a meme. What kind of world do we live in that we think that phone support, it might be a meme? That's a question I need to ask myself. But let me have a look on Topstep profile. Because I thought I saw that, but of course I could have dreamt it. So no, you see? So yeah, so here it is. Let me drag this over. Phone support. You asked, and blah, blah, blah. We're answering it. If you have any questions or concern, you can now call 888-407-1611 to speak directly to our trader support team. So there you go. Now, I don't know whether they also have an AI answering that. Hopefully not. But yeah, there it is, right? Dev Raj says, hey, good morning, Dee. I'm in a short for NQ. Oh, God, NQ traders. Are you going to really torture me with NQ this early in the morning? All right, let's have a look. I hate NQ with passion. And whoever has traded long enough, you get tired of NQ bullshit. All right, let's have a look. NQ. I mean, there's some chance of this turning around, and it's not like you're going to hold it for too long. What's your target? He said 350. Right. 350. So one problem with asking for more than what we have right now is that this is an out of hours time, right? So if you were saying, look, and again, we're opening inside value. We're nearly like 2.5 hours into the London session. We still haven't gone over the initial balance. So this to me smells range bound. But since you did go in overnight from the looks of it, I think that's a little bit too much to ask. So why not, why are you asking for such a big target during London? You already have a lot here. So why not just book profits here and be done with it? I mean, you're sitting on, whatever that is. It's like 70 points, almost. That's a lot of ticks, man. And because we're range bound, and look at this price action. Wick. Yeah, I would just take profits and go and enjoy your day, because that's a great trade. So well done for catching the overnight trade like that. But yeah, are we gonna go all the way down? If you're gonna wait for 350, my guess is that you're probably not going to get that until at least the overlap. So if you can wait for waiting in NQ is just fraught with difficulty, because it just kind of turns around and it goes boo, and you're out of a trade, right? So that's the problem that I have with holding NQ too much, too long. It's emotionally exhausting. To keep holding NQ through some of these. So because of that, I would just take profits, man, and be happy with that. Yeah. And this is coming from somebody who's a semi-swing trader, right? And I like to hold trades for a long time, but not on NQ. NQ is one of those things. If you've caught a runner, what does Mick say? You caught a tiger by the tail, and out of hours as well. So yeah, I would err on the side of caution. At least partial, if you're in with several micros or something, I would just partial the position and leave a runner. That's definitely an option. But yeah, don't hold all of it, because this is one good catch. You caught a runner. That's nice. But just don't hold it so long to get a reversal of NQ and craziness and then lose most of it. Because 70 ticks in a regular trading session is nothing for NQ. So this is why I said it says boo and you're out of a trade, because it's it whips up 50 points in 3.5 seconds. It's scary. I don't like it because I've been trading for a very long time. I'm nearly 44. I don't want drama, man. I want things that follow levels. I like my crude oil, platinum, copper. They are the ones that move very nicely, very smoothly. And they're not going to scare you out of positions. You have time to talk to yourself inside and go, yeah, actually. And that answers my Rashad's question. Dee, what is your favorite product to trade nowadays? It's still crude oil, but I've got to say platinum and copper are coming pretty bloody close to that. I really enjoy trading copper when it's moving. The other side is that it can be pretty quiet. So if you're in a day where there's not that much movement, it's not doing anything, it's slow. It's corn. It's like you're sitting in a trade and then you come back, you go make coffee or food, and you come back, you're like, it's only moved 5 ticks. Okay. And that's when it gets frustrating for me, because I like sort of medium volatility products. All right, let's have a look at some more questions. Amer, probably butchered that. If I did, sorry. Markets are in a bit of a roller coaster today. Yeah, I mean, isn't that every day, though? Pick your zones at the high and low. Stay away from the middle. Swinging hard. Yeah, I would agree with that. I mean, that's generally the idea, to not diddle in the middle. Like, the only time that you want to do that is maybe if we had some sort of a release as a catalyst and you can see that things are still pushing. So then, trade location doesn't matter much, because the momentum is something that's going to account for the lack of a good trade location, right? And then you expect it. This is why Hogue says, I want it to go now, because we don't have a location, so you need that momentum to take it away. That's the only reason why we say that, right? Eric 1M says, Dee, are you aware of any position sizing mathematical formulas that consider the following variables: market volatility, account size, win-loss ratio, and RR? I would say the closest thing to that would be risk of ruin calculator. I actually just posted on Twitter an old video from like last year, or maybe from a couple of years ago. Maybe even longer than that. So it was basically before I had the whole vaccine injury, and I could still make a lot of nice, engaging videos. So with that, in my method, I give people the formula that works, like mathematically sound, right down to the number of trades per day, right? So yes, you can have things like, I like to divide the average daily or session ranges by a certain number to get the stop size. Some people like to use the ATR, average on a low time frame, or whatever time frame they're looking at. I don't like that, because I think that we are then, like, let's say that you're in a very quiet day that's awaiting a release, and you've had some other releases the previous days that have caused a certain amount of volatility and introduced a certain amount of volatility into that week, but then your little ATR indicator, it doesn't account for that. All it's going to count is just several previous candles, usually 14. And then that's also fraught with difficulty, because let's say that we are in a quiet session in London, and then you get into the overlap. So what's going to happen with the ATR for a stop loss as a volatility measure when you go into the higher volume period? You're just going to get smacked in the face and you'll be like, what happened? So I like to use a larger time frame for that. But at the same time, okay, just give me one moment. Right, I'm back. Sorry about that. So basically, what's going to happen if you are using the ATR during the overlap period is that you're going to get too much volatility that is not going to be accounted for in the ATR as a stop loss measure. So be careful with that. As always, understand fully the measures that you're using to come up with a formula for risk management. And then just, try to follow it to the best of your ability. Whenever I see people entering positions and scaling in willy-nilly, they're like, oh, I'm in with 1, but now I'm going to scale up to 5. How much buffer have you got? $800. Okay, that's never going to work, but you do you, right? So to me, whenever I see things like that, that's always inconsistency that is coming from greed, and it's not coming from any logical thinking. So just by the fact that Eric 1M asked this question, it immediately tells me that he's like miles ahead of 90% of other traders who are just, clicking buttons high on hopium. He's actually thinking about the entirety of the risk model. That's something we all should be doing, guys. This is pro trading. It is not, I'm just going to sort of click some buttons and have a bit of fun. For that, go to a casino. It's much more fun, right? This is not fun. There are funner ways to lose money. Okay. And yes, you might get lucky. And again, we see that a lot on Topstep constantly. You know, one day up 50 grand, and then daily loss limit, 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 boom, they're gone. And, you know, is that what we want? No. And, you know, that's why risk models exist. Learn about them. Risk of ruin is a great starting point, because while it doesn't take in market volatility, it does take in position sizing. It kind of runs through Monte Carlo simulations to spew out what your risk of ruin might be. And what a Monte Carlo simulation is, it takes in the numbers, and you can even do that in some trading platform, trading journaling platforms, such as I think Edgewonk has it. And it's a useful measure. Why? Because it iterates through thousands and thousands of different ways the market can hit you. And as you know, probabilities, they're not necessarily evenly distributed. I'm just going to scare off everybody right now. I've lost everyone. There's 10 people watching. So basically what that means is that you can find yourself in a low probability environment for a whole 2 weeks. So you can have, let's say, one of the edge fall measures that we've seen quite a bit. It was, does the new high of day and low of day get created during power hour? Okay. And on a lot of the days, yes, it's not going to be created by the degree of like 85%. So you're not going to have a new high or a new low of day. However, then you run into a period where we're waiting for FOMC, and nothing much is happening until the very last hour, because I don't know whether they're asleep or whatever they're doing, or whether we just have the MOC bringing in market on close orders, bringing in extra volatility. And typically what happens in those days, they fall under that 15-20% of low probability days. You can see the price action being very close to the high or low of day. That increases the probability that that day is going to fall in the lower probability section, right? And that's interesting, because you can effectively figure out and anticipate which side of the probabilities the day is going to fall into. But having said that, you can suddenly have 15% chance of making a high or low of the day, and then that happening in the same week 4 times. So is that now a high probability situation? No, it's just an unevenly distributed probability, right? So we've run into a quiet period where nothing else is moving apart from MOC, but we're kind of trickling into a zombie rally, and thereby contributing to, the unevenly distributed events that we see. But that won't change the fact that if you still go back to observe 500 days, that will still be a 20%, 15% event. It's still not going to suddenly turn into an 85% event. But for that week, that was the high probability play. So once you understand that, and once you start to look at your trades, not as any single trade outcome, but simply as what sort of a probability this trade falls into. To use my previous example of high probability failed auctions and reversals post NY cut after 9 a.m. Central, I would say that every time I see a momentum trade that keeps going and doesn't really reverse, I would say that is a very low probability day. So if I lose a trade on the back of that I'm not going to be going, oh my God, I lost a trade. Oh, you stupid bitch. I'm actually just going to go, okay, low probability day. Next. I don't even think about it. I don't care about it. I'm not going to, because I've looked at those sorts of events for 12 years now, every single day. So I'm not going to get upset that, today it didn't happen, because I know it will. It's the positive expectancy over time. Time is what matters in trading. Anything else doesn't matter. Consistency is all about time. How long can you last, right? If you can find something that is stable over time, that is where longevity comes from in trading, right? It doesn't come from pull porking it 15 contracts on day 2 of the XFA, right? It doesn't. Or just willy-nilly clicking buttons until you're in with 10 lots, or going in with 10 lots and lasting all of 3.5 seconds before you hit your daily loss limit. All of that is not good for consistency. It is not good trading. It does not use any risk models. That is emotions. That is greed. That is, just losing control and letting your monkey brain doing the trading for you. You're not trading. Your prefrontal cortex has checked out. It's gone on holiday. It's gone on vacation. It's in the Caribbean enjoying the nice beach. And you're over here just monkey braining it and clicking buttons. So you need to learn how to match the risk model with your tendency to go crazy, right? And I know a lot of people have the crazy part. And then they go, well, this is what's tripping me up. Well, then track this. So you obviously know this, tactical. You need to track your mental side. And that's why I prefer Edgewonk over some of the other tracking platforms, because you can track anything. You can actually create a custom metric to track your emotions. Oh, here, what did I do? I entered another lot. I increased my position size 100% past my default position size that I've set for myself outside of the heat of the moment. Then I went a little bit crazy. Then I lost some money. And then I thought, F it, I'm just going in. That's something that can be tracked. But that's not on the chart, okay? You can't backtest your emotions. And that is where the huge variability comes into. I can give the same method to 100 different people. You're going to get 100 different results, okay? That's the most challenging part of being a trader. The emotional side, the fighting with yourself constantly. So if you can learn how to not fight with yourself and be a little bit kinder to yourself and just put everything in probabilities rather than emotions, that is working with your emotions, recognizing them, recognizing your mental triggers, and then working to minimize them as best as you can. You will never minimize them fully because we're not robots. I've said this many times. But we can minimize them, right? Let's have a look. What are your thoughts on algo trading? Does Topstep allow this? I think they allow it to a normal degree. They're not going to allow you HFTs. But HFTs done the right way, they cost a million, upwards of. Sorry, not 100 million of maintenance in servers and everything to actually get the executions that those sort of systems need. So if you think you're going to be an HFT trader, think again. So that's not allowed. But they do allow, like Robert Cooney does it, right? So they do allow algorithmic systems that automate whatever you're doing as a human, right? So if I'm going to do 3 trades per day, that can absolutely be automated to a certain degree. So yes, they do allow it, but obviously don't break their terms and conditions, because that's not, obviously they don't want to see people who are executing 1 million trades per day. And even if you try that, the fees are just going to come and get you. And we don't have enough size to move the markets. One of the big secrets of HFTs is that they have such a strong effect on the market due to the sizing, is that's why they win so much. It's not that they're exquisitely efficient. It's the fact that they have an effect on the market, and that's how they make money, right? But yeah, algorithmic trading is, within reason, is allowed on Topstep. Okay, so let's see. Slipper says, hey, Dee, I'm curious on your input of Grace's way of trading. Would she be guessing or is it? Now, she's an intuitive trader, right? So whilst I don't think that that's something that has longevity, Grace has actually reached out to me, okay? So I've got to say that she's a great lady, maybe a bit of a perfectionist to the extreme. But she is working on trying to modify what she's doing with the advice that me and Jay gave her. So she's trying. It's obviously always difficult, but she's trying. So that's to be commended. That shows bravery. That shows the willingness to do better for the sake of results rather than just 100% accuracy. And that is absolutely amazing, right? So whatever I think And how I trade is very, very different than she trades. However, she's trying, she's trying to match up the thing. She's lowered the position size. She's trying to increase her risk reward. She's trying to stay in a little bit longer. And, she is so hardworking that she will get there, right? I have no doubt. But do I agree with that? Would I go, oh yeah, definitely trade like that? Absolutely not. Like, I'm not going to sit here and say, yes, absolutely. Because I'm quite the opposite. I am somebody who has never really witnessed a colleague having 100% accuracy and having success. In fact, it's always super low risk reward, that at some point comes back to bite you. Especially if you're not able to get out of a position early and you let it go to minus 10R. So that's a problem with the system design, regardless of accuracy. So in my eyes, lower accuracy and high risk reward is a much easier way to live, I am 100% sure of the setup that I'm taking because of the probabilities that I've seen. But I'm not going to have 100% accuracy, especially not trading 7 different things, right? So I typically aim for around 43 to 53% accuracy. If I overshoot that, excellent. But I'm not going to fret about my accuracy going down. However, if my risk reward goes down, I will absolutely be very upset. And I'm like, what the hell am I doing? I'm taking low probability setups. So it's a fine balance between risk reward and accuracy. It is not a separate thing. They are part of the same equation, right? So they need to be matched. They need to be married. And there are certain numbers of combinations that actually Risk of Ruin will tell you that whenever you have a super high accuracy system, usually it's a negative risk reward. Like if somebody found a way to have 100% or 97% accuracy on a 2-to-1, they will be very rich. But, like we're talking like Elon Musk sort of richness, level of wealth. But the reality is quite the opposite. All of the big traders in the world, they're the opposite of that. They have very high risk reward and at times very, very low accuracy. We're talking turtle systems, 30% accuracy, but they can be on these like swing trades that bring you 30R, right? So it doesn't matter that you're going to be wrong a lot. No, because once you catch a runner, you can stay on and you can not just cover the losses, you make a ton more. Now, in intraday trading, that's a little bit different because we have the time constraint. So you can't hold something until the cows come home because we have to be flat at the end of the day. So how do we get around that? It is a good thing to have a moderate accuracy, moderate risk reward, whatever you're comfortable with. And this will vary from person to person. Like I'm pretty comfortable when I have about 45% accuracy and 2.3 R multiples. But I'm okay having 53% and all the way down to about 1.4 R, right? Anytime I go over that, I go into 70% accuracy, it means that I've scalped and my risk reward will go down to about 1-to-1 or 1.1-to-1 because I will always take 1 R, 1.5 R, so therefore it's not that bad. But I will always try to maintain a positive risk reward. However, I know that I've probably scalped a little bit too much that week and that I should lay off of that. Because to me, it's been very counterproductive to waste my energy doing like 50 trades per day on negative risk rewards because that robs you of your time. We are here not to be slaves to the screen, ergo having less time in life. I'm here to have more time, more resources, less screen time, right? So I don't want to sit there and be a slave to the charts, having to watch everything to 12 hours a day to find the trades. I want to be able to walk away, set an alert, and then even if I'm on the way to West Sussex, in my car, the alert arrives. All I have to do is just look at my screen to see exactly where we are. I remote desktop into all of this. And we're done. Like, I have a setup. I enter a trade, don't even check it until I'm the other side of West Sussex. And then I arrive and I'm like, oh, look, I'm sitting at 50 ticks profit. Take, done. That is how I like to do it. If you can't walk away from a trade, that's a big problem, okay? It means that you are too locked in, or you're not even sure what's going to happen to it, or you're just afraid. So that's all of that means, emotions. You're not working from a statistical probability. You're working from a fear-based response. Oh, is it going to work? Oh, is it going to work? Oh my God, I'm going to blow it. Oh my God. Like, you don't want to trade like that, right? You don't want one trade for everything to be dependent on one trade. You want every trade you take to add a bit more to your balance, and you want every losing trade to not lose as much. That is the whole thing. Lose less money than you win. That is the mathematically correct way to do it. That is what brings in longevity. But we have seen people who do have high accuracy and ballpark 1-to-1. That's okay. But I don't like seeing negative risk rewards. And I will always say that. So if it's you have 90% accuracy, but you're 0.3 risk reward. At some point, that's going to come to bite you. Like I said. Why? Because it's a negative risk reward. And if you trade long enough, it's going to work against you at some point. So yeah. Anyways, let's see if we've got any other questions. If not, I'm going to leave you to do things. Air horn GC, yes. Pew, pew, pew. Like Andre says. Pew, pew, pew. All right. I am starving. Yeah, James, I know. Yeah, it says not so sunny in Sussex today. It's not that sunny in London today either. It's a bit miserable. But, it's autumn, so what do we expect? All right, I think that's it for the day. I don't see any other questions, so I'm going to finish it up for today. Enjoy the rest of the broadcast. I will be here again for the London session tomorrow. Again, don't rush. It is Monday. One thing that I don't like doing is when people are like sitting there on a Sunday, and they're like, oh, we're waiting for the markets to open. That is also... strung out, I need my fix. So try not to do that, because that screams dopamine increase. If you've watched Dr. Steenbarger's AMA, Ask Me Anything, I think it was Anne-Marie who asked him how much dopamine should be involved in taking decisions, and he said, ideally none. So strive to that. Strive not to get excited about wins and losses. That's it for today. This has been London Session on TopstepTV. I'm Deeyana Angelo, and I will see you tomorrow. Take care.